Hello, my name is Chris Wolgamott, Director of Financial Education at Meritrust Credit Union. In this lesson, we're going to talk about wise spending. When we talk about wise spending, the first thing we look at are an individual's expenses. Expenses are items that a person either needs to purchase or wants to purchase. And when we talk about expenses, we really like to talk about keeping expenses as low as possible so that people have money left over at the end of the month. This money that's left over could either be saved or it could be used to purchase additional items if they have a crazy month of spending. But it's really important that expenses are the primary focus of a person's budget. One thing that an individual can do to keep their expenses low is to price shop. When an individual price shops, they shop around for the same item at a lot of different stores, or they look for similar items. A lot of times you can substitute one item for another that might be a little bit less expensive. The second way a person can decrease their monthly expenses is to prioritize their spending. There are some items that a person might need to purchase every single month. And there are other items that we would like to have, but they aren't necessities. If you can locate a couple of those items in your budget and cut down on those, that will help ensure that you have some money left over at the end of the month. One of the things that I love to purchase are candy and Dr. Pepper, two of my favorite things. However, looking at my budget, I realized that it can be quite expensive to purchase those items on a regular basis. So those for me just become fun items that I buy every once in a while. All of us have different expenses that we could cut back on just a little bit. Some of those might be fun things like candy. Others might be a little bit more difficult, like our television viewing habits, or maybe our insurance. And adults especially have to look at a lot of these different expenses to make sure they're not spending too much money on any one expense or any one category. So being a wise spender first entails looking at your budget, making sure you're not spending too much money, and cutting back on some expenses if you are. Now that we've talked about expenses, let's move on to ways that we spend our money. There are 6 different payment methods that we'll discuss, and we're going to talk about the pros and cons of each one of those. The first payment method is good old-fashioned cash. Now, cash is money in paper form and includes both paper form and coins as well. Now, cash is really convenient to use because lots of different vendors accept cash as payment. But it can be inconvenient because if you have to spend a lot of money at a certain place, that means you have to carry a lot of cash around. That can get bulky and even dangerous carrying around that amount of cash. So cash is a great way to spend money if you're spending small amounts of money or if you just need a little bit of emergency money in your pocket. The second payment method that we talk about are checks. A check is a written contract between you and the person that you are paying. The person that you're paying takes this check to their financial institution, and then that financial institution takes the money out of your account and puts it into their account. Now, checks are convenient to use because you don't have to have the exact amount of money in your pocket. Instead, you write the check and you let the bank figure out how much money needs to be taken out. But checks are also easy to use for fraud. So you want to make sure that you always know where your checks are at so that nobody can take them and use them falsely. Also, when you write a check, it's very important to know that you have the money in your account before you've written the check. If you don't, you might receive what's called a non-sufficient funds charge, which means that you're receiving an additional charge because you went negative in your account. So it's very important that you pay attention to your balances when you're writing checks. The third payment method we're going to talk about is a debit card. Now, a debit card is a card that is attached to your checking account, and it's very easy to use because most vendors now take debit cards as a form of payment. It's also really important that you know how much money is in your checking account before you use a debit card, because debit cards can also draw you negative in your account, and you would incur an additional fee if that happened. You also want to make sure you always know where your debit card is so nobody can use it fraudulently as well. The next payment method we'll look at is a credit card. When you use a credit card, you are borrowing money from the bank or the credit union that issued you that credit card. So it's very convenient because you are buying the item now and you're paying for it later when you pay back the loan. When you use your credit card, you want to make sure that you're not overusing the credit card because you have a set limit that the bank or credit union will allow you to borrow using this card. You also need to make sure that you have enough money to pay this card back every single month. You don't want to overuse the card and then not have enough money to make your credit card payment. The next payment method we'll talk about is a gift card. Now, gift cards are great because usually you get them as a gift and it's free money that you get to use up to a certain point. With gift cards, the money is loaded onto the gift card and you use the gift card until there's no money left loaded on it. Now, the advantage of a gift card is you can use it very easily at the store where the gift card was purchased, and some gift cards you can use anywhere. But the downside is that some gift cards, like this Olive Garden gift card, you can only use at certain locations. Happens to work out well for me because I love Olive Garden, but if I didn't, this might not be as good as a gift as it sounds because I can only use it at certain restaurants. So when you're giving a gift card, you want to make sure that the person likes the store where you're buying them the gift card. If you're receiving a gift card, you want to make sure that you know exactly where this card is, because if somebody else were to pick this up off the street, my name isn't on it, so anybody could use this gift card. The last payment method we're going to talk about is a personal loan. Now, you might use a personal loan for a lot of different reasons. You might get a personal loan to buy a vehicle, or to buy computer equipment, to buy furniture, or maybe even to take a vacation. Personal loans are great because they allow you to purchase a large item or multiple items and then pay back that item little by little. It's important that you don't overspend when you get a loan, and it's also important that you make your payments on time every month because personal loans can impact your credit, which means that you might look irresponsible to other people like financial institutions if you don't make your payments on time when you are required to make them. The next thing we're going to talk about when we talk about payment methods are using a debit card versus using a credit card. There's a lot of similarities, but there's 4 distinct differences in using the 2 different forms of payment. The first is that when you use a debit card, you're accessing your checking account. When you're using your credit card, you are borrowing money from a bank or a credit union to use and pay back at a later period of time. When you use your debit card, you typically need to use your personal identification number or your PIN number in order to use this out of your checking account. With a credit card, you verify the transaction using your signature. With a debit card, it will not impact your credit history because you're not borrowing any money. But with a credit card, it impacts your credit history based on when you make your payments and making that payment on time every month, and also with the amount of money that you borrow from this credit card. We recommend that you keep your balances low on credit cards, meaning that you don't borrow as much money as they allow you to borrow, because it looks irresponsible if you borrow too much money with your credit card. The last distinction is that you need to know the balance of your checking account when you're using a debit card. And with your credit card, you need to know how much money you have available to borrow from the bank or credit union that you got the credit card from. So those are the 4 different distinctions between using a debit card and using a credit card. The last thing that we're going to talk about in wise spending is how to borrow money from a bank or a credit union. There's a 3-step process when you go to get a loan. The first step is the application process. The bank or the credit union is going to ask you different questions about your personal finances, and they're also going to look at your credit report, which is a document that shows all of the different times that you've borrowed money and how well you paid those institutions back. The second step is the purchase process. Once you've been approved for your loan, you get to go out and spend the money that you've borrowed. You might spend that in one trip, like buying a car or buying furniture. You might spend that a lot of different trips, like using a credit card. But purchasing allows you to use that money that you've borrowed and then pay it back over a period of time. The last step in the borrowing process is the payback process. If you get a personal loan, that loan will be divided into small chunks and you'll pay back those payments over a long period of time, sometimes up to 6 or 7 years. If you have a credit card, you'll make a monthly payment based on the balance of money that you've borrowed against that credit card. Now, it's really important to make your payments on time every single month so that they will report well on your credit report. If you make your payments late, you might not only impact your credit score, but you might also incur a late payment, which will make that even more expensive. Now, borrowing money is a great way to pay for larger items, but know that you pay back interest when you borrow money. So it's always going to be a little bit more expensive to use borrowed money than it is to use your own money. Well, we're talking about wise spending. We've talked about the difference between debit cards and credit cards. We've talked about how to apply for a loan. We've also talked about expenses and keeping those expenses low. I hope that you learned a lot in wise spending and that you'll be a wise spender as you go about your personal finances. Thank you.